Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 6th of January. Starting off the new year with the FTSE backing off from that December resistance line there around 82.70. There is some support there at the 50 and 200-day lines, 81.80, but then below that we've got potentially another test of the floor of that rising trend channel from September 2023, currently at 80.80, but at least while we're above the floor of that channel, we've still got the chance of heading back up to 8,400. Best case scenario, I suppose, for later this year would be up to 88.80 and the top of that channel. Moving on to the DAX, and here it's still been trying to regroup and doing it okay at the moment, in the sense that we bounced above a rising 50-day line. That's currently at 19,600. That was the old October resistance area as well, so old resistance becoming new support, and really eyeing up the first gap down that we had last month, 20,200, as an initial target, and obviously the record highs. And the top of that channel there at 20,900, I suppose, is in view. Worst case at the moment is we've got to break or retest that 50-day line again, and or test the floor of that channel there, 19,400. But that's at the moment very much the lowest we're expecting this market to go down to. On to the Dow, which obviously we looked at yesterday, but here I've got this potential rising trend channel here from July. Floor of the channel there around 42,400. The November support there, 41,700, and I suppose at the moment that's the worst we're expecting this market to fall down to. And as long as we're above the November support, then we've got resistance and a target there, 43,300 or 43,400 rather, over the first part of January. Moving along to Bitcoin, where it's all about 100,000 and trying to get there, and we're not too far away from that now, which is quite confidence boosting, in the sense that we managed to bounce basically at the mid-November 92,000 zone, and did that both once towards the end of last month and also at the middle of last month. So above 92,000, looking for a W-shaped reversal, end of day close above 100,000, leading to 108,000 as a best case over the first part of this month. Nice to see the market bouncing at and above the rising 50-day line, which is a good look. And obviously we haven't had any red candles in the mix since basically since the start of the year, which is quite a result in this kind of situation. But end of day close through 100,000, hopefully the trigger for a push to the upside. Worst case still 92,000 as support, and maybe Bitcoin being Bitcoin, we might have to do that or test that area one more time. Looking at the RSI now in the mid-50s, which is exactly the right place for a fresh move to the upside. On to gold, and here this market just about hanging on to the rising trend channel there from February. That was at 26.20, the floor there. 50-day line 26.70, so end of day close above that. We're looking for 27.50 quite logically, which is basically post-November resistance. We still have that rising trend channel heading for 2,900, hopefully Q1 this year, but obviously a bit of resistance to get through over the near term at that 50-day line. Moving on to Avacta, where hopes that the shares would repeat the type of move that they gave with the RSI 50 rebound back in June, has so far been correct. So it's almost the same setup there, 50-day line and RSI 50. We've hit that resistance line, which was our target there, near-term target, towards 58 pence. I think the high is 57.5, but 58 pence on that line. End of day close above 58, and then we're looking for obviously a retest of October resistance at 70 pence. But the big win here obviously would be that that was the last test of the 40 pence area, and the shares will now go up and stay up. Only back below the 50-day line now at 48 pence, really suggesting that we are in trouble here. The other point to note is it looks as though the 200-day line is going to start rising as well, so we could be in the run-up to a golden cross, which really would be a great start for 2025 for this stock. But nice to see that RSI bounce off neutral 50 was once again a leading indicator on the upside. That was around the 48 pence level. A stock which was the Trump trade par excellence in the latter part of last year, obviously ahead of the presidential election result, was Ferrexpo, and still is Ferrexpo. Here we've got what looks like a mid-move consolidation here, and probably as little as an end-of-day close above £1.20 could take the shares up to the upper parallel of the, the third target there at £1.40, maybe by the end of this month. Obviously, we've got the inauguration on the 20th of January, but we've also had multiple bounces of the RSI above neutral 50, so that's 3 of them there, which is just about as strong as you can get. Obviously, you saw with the Avacta chart that even one RSI rebound at neutral 50 can do the trick, and we had a few of those back in October as well. Only back below the previous target there, 102, really delaying the upside scenario, and ideally we should stay on the right side of 105 on Ferrexpo. On to Fusion Antibodies, which has really transformed itself over the last month or so, and exceeded expectations even here, actually, in terms of the upside. 10p looked like it was more than enough in the near term, but above the last target there at 9 pence, looking for a best case scenario target at 15, which was penciled in for the end of this month, but the way things are going, might even get there by the end of this week. Very, very impressive indeed, and that saucer-shaped turnaround that we've had over the last year, very, very impressive. The key here, breaking that old resistance there at 8 pence, and the area before that there, just towards the 10 pence level, above 10. Really looking like 15 is a done deal on Fab. Moving on to GenIP, which I am one of the few people who actually look at this with any zeal, but here we've got the situation where we've got a rising 50-day line, we've got a sideways shuffle, as I call it, with support above that rising 50-day line. That suggests that we'll not only hit the top of the triangle there again at 35 pence, but can actually achieve a bit more than that, the upper parallel of that broadening triangle from October, heading for as high as 50 pence, which could be the target for the shares by the end of next month. Also, nice extended rebound off neutral 50 for the RSI. So that's 2/3 really good signals there on GenIP for a potential 50 pence target while we're above the 50-day line now at 23 pence. On to Guardian Metal, which got the seal of approval from Premier Miton today. Second gap higher in the last couple of months, bear trap gap reversal back in November, which we highlighted, and then the gap higher today above a rising 50-day line. That suggests that the current target there at 43 pence, actually now up to 44 pence, is still valid. In fact, more valid than it was even before today's news. Above 28, looking for 44, perhaps as soon as the end of this month. Remember, any shares that rise after fundraisers tend to be ultra strong. Moving on to Genel, and a stock which I haven't looked at for ages, coming up here. Here you can see that, if I can spell it properly, we've got the situation where the shares have managed to deliver a U-shaped turnaround in the recent past. The situation in terms of this looking like a decent turnaround is backed by the way that we had 2 gaps down back in December, and gap fill buy signal on the 23rd of December above that resistance there around 64 pence, looking for the shares to fill the gap up to 85 pence by the end of next month or even sooner. Punchy call, but the risk reward good there in the sense that we've got neckline support there at 64 pence, and below that would cancel the buy scenario. Moving on to Mosman, where I think somebody was asking on Twitter whether I thought the shares, or whether the shares could deliver a decent upside this year. They've started off well with an unfilled gap to the upside through that resistance line there from July. All that's left now is to get an end-of-day close above the rising 200-day moving average at 0.038. Above that, we're looking for at least an intermediate target towards the low 50s, so 0.05 to 0.055, perhaps by the end of this month. Ideally, we stay above the gap floor there at 0.031. Stock which has delivered the goods in a very nice way over the recent past has been Rockhopper, and delivered by bullish divergence and gaps to the upside, etc., etc. Current situation is that We have easily exceeded our first target there at 22 pence. Second target, which looked rather optimistic, is 34 pence. Looking for that over the next couple of weeks, and looking for that while we're above recent resistance on the way up at 27 pence, so above 27. Looking for up to 35 or 34 pence on Rockhopper over the near term. Stock which had a decent flurry early, well, in the middle of last year was Simec, but it's had to regroup, but is regrouped nicely over the recent past. We've got the 50 and 200 day lines rising. We've broken a line of resistance from July at 1.9 pence above that, looking for 3.4 pence. Maybe as soon as the end of next month. Really liking that rising 50-day line and the support for the shares above that. So that looks as though that is in business, as we're also helped by the RSI 50 rebound that we've had over the near term. A bit of a lap of honour now with the next stock, which is, I think, almost an impossible one to chart, but we've done it here. Sealand Capital, and here we were expecting or hoping that the shares would bounce off that previous target there, 1.2. The initial target there, 2 pence, but still looking for a best case scenario target here at 3.4 pence, which maybe we'll get over the next day or two. And ideally now we stay above the previous December peak there, 2 3/4 pence ahead of a move to 3.4. Not quite sure what the next target would be after 3.4 pence, but maybe we've got a day or two to work out what that might be. TM17 is next, and here sounds a bit like an 80s pop group, but Team 17 has managed to bounce and consolidate above a rising 50-day line. Top of the triangle there at £2.94, and that's what we're looking for, maybe by the end of next month, while we remain above recent resistance at £2.29. You can see that the shares fell out of that rising trend channel they had from December 23, but have started to regroup after a bear trap. Moving along to Tungsten West, which already looks like a decent prospect for the start of 2025. Got rising 50 and 200 day lines there. The next time they cross, but over the next 2 or 3 weeks, will be a golden cross. The run up to a golden cross tends to be the strongest part of the cycle. Initial target here, 4.5 pence above that, looking for directly a move up to 7.9 pence in the top of that rising trend channel from March last year. So not quite sure what would do that, but it looks as though something very exciting is ready to happen there. Moving on to Vinance, which is currently on the Aquis market, but will this time next week be on the main market of the London Stock Exchange, which needs all the newcomers it can get at the moment. Here we've got the triumph of a Bitcoin miner being listed on the main market of the London Stock Exchange, and we've got the charting position here from November 2023 with a rising trend channel heading for 22 pence, while we're above the floor of the channel and the 50-day line at 14.25 pence. Let's see if Vinance can step up to the plate. Another stock on Aquis, which is apparently moving to America, is WeCap, and here we've had a second gap to the upside in the last couple of months, and this one looks quite important in the sense that it's through major resistance there at 1.1 pence. Initial target here at WeCap 1.3 pence, hoping for up to 1.8 pence by the end of next month or even sooner, especially if those both the 50 and 200 day lines start rising in earnest, which I think if you look closely, both are rising at the moment or just have started to rise, and that is a major technical win. Finishing off with U Group, which is not normally the type of stock we look at here, but couldn't resist this rising trend channel there from February last year, top of the channel at £24. Looking for that to be hit by the end of next month while we're above the £18.90 area, which is basically post-May resistance for the shares. That's it for me today. More updates tomorrow.